Hey everyone, I was doing a members live stream and decided just to make it public. Thought that'd be a nice thing to do. So let me re-share this. Decided to make it public. And let me share in the Discord. So I have so many places to share this link. It's going to take me a minute. Gotta find the link again. Hey everyone, just sharing the link for this live stream. All right, I've got that shared everywhere. So first, what I'll do is I'll just recap things. What I was doing today was a members live stream. I did one for 2 hours earlier this morning and decided to come back on, and I was just going to basically sit for most of the day on live stream, but maybe mute it every once in a while and just leave it running and come back when something interesting is happening instead of starting and stopping it. So I will just recap for non-members, basically my perspective on things. There was a setup I was interested in here, which was move up into this golden pocket for a short. I was asleep when it happened, and I had an alert go off. I was half in and out of sleep here, and by the time I got to my computer, this was the 1 minute candle, and this was like 5 in the morning for me. I missed it as a short. Some of the members did get it, a few of them. It was just a level of interest for me. I did say I wasn't going to short the first touch of the level because I was expecting us to kind of grind up into it. But anyways, this was a really nice reaction on high volume. Unfortunately, missed that short. But certainly important resistance, very clear. That's just an important retracement level. And then I took a long on, I'll just show this idea here, that I did stop out. And the idea was, as we were coming down here into the New York Open, what I was looking for was a swing failure of this low. So sweeping the liquidity under this low into the 382, which is kind of the lowest or the smallest retracement. You'd be looking for a bullish trend continuation. And sweeping this low, reclaiming it. I took a long off there, but as price broke down, I just stopped out the long. Because I really only have 3 levels of interest here identified, which was the swing failure of this range. There's this key horizontal that we're at right now with an ascending channel idea. And this horizontal is just these levels here. You can see it was support, support, support. It's a bit of a region. So that aligns pretty well with this ascending channel idea. Anchored from here, or trend line from here, anchored to this low. So the only thing I would say about any long ideas from here is that order flow is not particularly bullish here. There is some low time frame ideas where you could be looking for scalp setups, and you'd essentially be looking for, every time these lows get swept, to take a long, take profits aggressively, stop loss to entry, and you could potentially keep doing that, and maybe turn some of that into a swing from here. So like, for example, this could be a scalp setup where you take the liquidity, you rally, and you just look for quick take profit ones, but you have to be very, I think, aggressive with your profit taking, because technically you're breaking down structure, but you're still just looking for those longs every time you come down to support. There's a descending channel idea here. This is the 1 minute time frame, which you can, I mean, price is technical even on this time frame, and so this would be worth having on your chart for scalping ideas. But you know, you're expecting to maybe lose 40% of your scalps, but the risk reward should be adequate. Joshua saying he shorted 22,000. Great. Someone asking, did anyone short the Bitcoin 22,800? Yeah, it is a level I had talked about even publicly in like public live streams and videos when we got a reaction off these lows. But I did miss that short. But we are getting a bit of a reaction here. I do think, if I had to, personally, I do think it's likely we carry on lower, even if we do see some kind of bounce here. Maybe we come back up and test this point of control and get a move down. Again, nothing particularly bullish here in order flow. And I was pointing out yesterday, as we were consolidating here, we got really nice clean bounces off the point of controls, but that order flow was bullish here. And you know, here I was pointing out order flow was bullish, increase in open interest, so you know, driving up into this level was probably the most likely scenario. But one of the reasons I think that lower might be likely now is we've broken down this major fib retracement, which is very important, and it's more likely we carry down to another key level, which would be the golden pocket. And then ETH has some really nice levels below as well that seem likely to be tapped. So we'll see. Sol breaking down its ascending channel here. So you could be looking for, you have the point of control now above us, which is, oh, I don't even have the volume profile on, but the point of control is here. And so that's going to be resistance, along with the back testing this channel. So we'll see if we claim that or carry on lower. I didn't long any alts today. I am interested in adding to my longs on alts. Someone's asking me to say more about swing versus scalp differences. Well, a swing trade is just the time frame of your idea. Like, this is a swing trade because it's based all off high time frame ideas. It's based off of ideas within this whole range. It's based off of high time frame harmonics, high time frame Elliott waves, and even a high time frame idea that I don't have on my chart. I was showing examples of key retracements earlier today in the members group. You know, even this 786 is a key retracement from the coronavirus low that we've tapped. So the idea being that this is, you know, this is one of the reasons I longed this level when it hit. But so when you're taking swing trades, it's just all your charting is based on high time frame ideas. Now, would it make sense, now if we want to talk about scalps, if I was scalping this channel, would it make sense for me to turn this short into a swing short? If I'm basing my analysis off of 1 minute time frame levels. Well, no, because all my analysis is on low time frame. So, golden pocket, let's say from this pivot high to this pivot low on the 1 minute time frame, this 1 minute time frame descending channel, these would be scalp trades. Does not make sense to try to hold this trade forever. So the difference would be the time frame you're charting on. If I'm trading this 1 minute channel, everything in here is a scalp. If I'm trading these 1 minute swing failures, now there's a key level here, a higher time frame idea. So that adds a little bit of, you'd be able to maybe 50% take profits, try to leave 50% running, and see if you can turn it into a swing. The only reason that I'm not too optimistic about adding 2 swing longs here is it's very uncommon that major retracements come not on key fibs. And I will just go over this one more time because I think it's very interesting. We'll look at the daily chart here on Bitcoin. You will find that whether it's the 382 or the golden pocket, I'll explain briefly where I'm pulling these from. This pivot high to this pivot low, this was a perfect 382 touch and a rejection. You put in other pivots, but you typically put in key pivots at key retracements. Now, when price finally made a new low, because we had this high to this low pivot, now the new low would be here to the all-time high at the time. Perfect touch of the 382. We then reject, or we then bounce as a perfect touch low to high off the 382 support. And it's not that there's not other pivots in this daily chart, it's just the key pivots come in typically on key fibs. Here we obviously had a rejection at the golden pocket from the high to the low. This is our golden pocket resistance. We put in other pivots, but a key pivot came in here. And so you're always looking for those, and I'll just point this out. From the all-time high to low, the 618. The new high to the new low, the 382, and so on, right? This is very common, that it's not to say over the days and the weeks that you don't put in other pivots, but that the key pivot comes in eventually at the key fib, this other 382. So for me, if we aren't at a key fib, I know it's a lot less likely that is going to be a major pivot. And like I pointed out, this was the 886. This was a golden pocket retracement. These are more likely to be key retracements, whereas these pivots happen, but the key ones are typically on major fibs. So that is why, higher is not always better for shorts, lower is not always better for longs. To me, the 382 is more interesting to long than this, just because it's a key fib. And this is more interesting than this. 382 is more interesting because those are more likely to be key pivots. And I pointed this out at the time here, that if we hold these really bullish here, even in the low time frame, 382 retracements, those are bullish retracements to hold for impulses higher. And you kind of have tight invalidation long ideas from levels like that. course, anything can happen. It's just probabilities. So longs from here, interesting, less interesting, more interesting. And for me, just really cut. I have no reason to just sit in a long from the 382 as price just carries on lower. I'd rather just cut it and look for a different setup, or cut it up here rather. Someone's saying we need one more low to 16,700 or 17,000. We'll bounce back from this point or those points. Possibly. Taking these lows would invalidate a lot of my Elliott wave ideas locally here. Not to say there's not ideas lower, but I'd be cautious. I might be interested in trading a swing failure of this low. But I think there's still really bullish ideas coming from here, both high time frame harmonics and Elliott wave counts. So well, not necessarily from here, but just from this low, looking for ads on retracements. Be interesting. This is the interesting local idea on ETH, but if we break this ascending channel down, pretty much just this would be interesting to me, around $1,300. Worth noting how much volume came in on this move down. You know, we've had lots of volatility in this range since June, but this is essentially, beyond this move, our highest volume candle on Bybit. And the same applies to a lot of alts. There's a ton of volume coming in today. Trade setups I like a lot are swing failures. So if I identify a level like this, I'm looking for that high to be swept, short when the level's lost, stop above the high. And someone asked, you know, decision trees would be nice. Swing failures are very simple decision trees. If liquidity is grabbed and you come back below, you enter a short, stop above the level. Those will offer you great positions. You can do them on lots of time frames. If liquidity is grabbed, come back below, short, stop above the level. These will give you great trades. Even this, swing failure, reclaim the level, stop above, below. You want to be at key levels, and that was my short from this high. Again, I had a level there, but it was liquidity grabbed, come below, enter short here, stop above the high, swing short. That was my swing long, liquidity grabbed, into the 886, enter. And that could have even been the trigger here. And that was my trigger on this 382 idea. That's now not on my chart, but liquidity grabbed, price came back above, stopped below, but it got stopped out, which is fine. You know, you're just looking for those tight, clean invalidation ideas. Someone's that saying they hear me talking about volume a lot. Well, volume is your liquidity, right? So if you see, you know, like a perfect example is, it was this high. there was about $300 million of volume that opened here at this of longs. And if you see that right into the golden pocket and a swing failure and then price reject, well, now you know that it's very likely that market makers just filled hundreds of millions of dollars of shorts. Price is now rejecting that long, all those longs, those breakout longs were just completely stuffed, and that can generate a really strong move down. That's why volume's important. But if like no volume came in there, not so interesting. You want to see those big spikes in volume at key levels, because that is your confirmation that there's some liquidity at play. Volume can also indicate a strong move. You want to you want confluence with open interest as well. Moves that happen on high volume typically are stronger. Someone's asking how FTM is looking. Well, we're kind of around the golden pocket, but we've broken down this point of control. You can see this was horizontal support on the hourly. It's resistance now. I would be more likely to be interested in this 786 retracement if we could swing failure this low and long on a reclaim with a stop under there for adding to my longs. I do have swing longs from here on FTM. Obviously, I've taken profits. Never underestimate the golden pocket retracements. That's where we rejected from. And I will point out for people who, you know, there's discussions that happen all the time on Twitter about TA. Golden pocket rejection on the FTM. Golden pocket rejection on Bitcoin. S&P 500, literally golden pocket, golden pocket, golden pocket, golden pocket. This was a golden pocket. So anyways, I was talking about the members live streams, but these levels are so important technically, so you never want to ignore them. And on Bitcoin, delete some of these low time frame fibs. Our major golden pocket to the downside is here. We've broken down the 382. Okay, so this is really important. Somebody says, Lucky Ape, on the weekly and monthly frame, please let me know how much Bitcoin can go down about the price range. Please, thank you very much. I can't answer that because I don't know how much price can go down. I'm just trading technical levels with invalidation. I don't know what will happen any more than anyone else does. Price could go to $0. It could go to $1 million. I'm just trading technical levels. And so one thing I always talk about, yeah, so give me 1 second. One thing I always talk about, whenever I get questions that say, can price go to here? Where can price go? The answer is anywhere, yes. The answers to any can or is it possible questions, it's always yes, because anything's possible. The way I think about price action is not can price go here, will price go here. I identify levels, and it's if price goes there. If price comes here and swing failures is low, I'm interested in a long. You know, this would be a if price goes here, I'm interested in a short. I have a lot of scribbles on here from other videos. But again, if price comes down to this retracement, I'm interested in a long. That's a long I took. And it's just ifs. It's if this happens, I'll do this. And if this level breaks down, I will cut my long. And so I'm not thinking, I'm never thinking price cannot go any lower, because anything can happen. And that's why you use invalidation and risk management. An important distinction. Yeah, so Gerard saying, reason I think people ask you these types of questions is probably because you had some Elliott wave ideas that played out. So now they think you have a magic ball that predicts the future. The thing about Elliott wave ideas is they're very powerful, and you can get amazing positions off of them, but they can be invalidated. So like there's certain things that if they happen, those Elliott wave ideas are not valid anymore. They're just like any other kind of technical idea. Nobody knows what will happen. We can look at price on a low time frame here. This is technically on a 1 minute time frame. This is a swing failure and a back test. And so the way those work is price moves below the level, back above, and it back tests the level as support. And if you want to long a swing failure, you enter on the back test and your stop goes below the low. Again, this is a 1 minute time frame idea. It's a very low time frame idea, supported by this higher time frame key horizontal and that ascending channel I pointed out. But these are ways that you could potentially scalp entries off of more medium time frame ideas like this channel and this support here, but using 1 minute time frame ideas for entries. But they still need invalidation, they still need stop losses and all that stuff. But you can tighten everything up if you want to use 1 minute time frame analysis. Technically, we are breaking out of this descending channel on the 1 minute time frame. And I will point out, this channel obviously would have offered some nice scalp setups, but the more defined this channel becomes, the more times we test the highs and the lows, the less likely it is to offer good trades. Someone is saying, how many percentage risk do I recommend you guys take per trade? Well, I think that's up to everybody. I think a good standard is 1 to 2%. And if you're a new trader, I mean, the less risk you're taking, the better. 0.5%, 1%, 0.1%. You do not want to be really even trading with real money until you know you're consistently profitable. So execute, whether they're paper trades or you're trading with a couple dollars, execute 30 trades and see how well you do. And if you're doing well and you're happy with the results, you know, then move up to more standard risk sizes like 1% or 2%. But why take on risk if you don't even know if you're trading profitably? I think that's one thing that people get so wrong about trading, especially when they're new, is they don't understand how much there's to learn. And it's not just technical ideas. A lot of it's psychological and emotional. And you should develop those skills before you're putting a lot of your capital at risk, because you have to protect your capital, because that's what keeps you in the game. People are asking me to chart different altcoins. I will be honest, I don't really want to. I'm tired. I barely slept at all last night, so you know, I'm doing this because I'm going to be awake and as long as I can be, because I'm interested in trading today. And I thought this would actually be a nice opportunity to, you know, I've talked about doing scalping live streams where I'm not even trading, but I'm just talking about scalping ideas. Because it's kind of hard to trade while you're going through ideas, because these are such low time frame ideas. But I thought this would be kind of a cool time to even do a bit of a scalping live stream. Um, all right, let me just read some questions here. Someone's saying if you, let's say you have a swing long from 18K, took some profits after some time, added at 22,000. So average is 20K. Do you move your stop loss at the whole position to break even? Well, one, I would say 22,000 probably isn't the best place to add to a long there, because you're quite, but I mean, it's not the worst. What you can do, if say you've added at 22,000 and you've taken profits on that, you can move the stop loss for your added position to break even and leave your original stop loss at break even if you want. You don't need to move everything up. I typically trade my added positions separately from my original positions. On Bybit, which I think is a great exchange, you can run separate stop losses on the same pairing. You know, so if you have an initial entry that has its own stop loss, you add to it, that can have its own stop loss. Someone's saying, do you by any chance do CME gap trades? I don't, no, I don't take trades based off of a CME gap, but I do look at them. Yeah, somebody asking what I think about the ETH merge. I don't really think a lot about it. You know, ETH swing failure these highs. I did have shorts on ETH there. There were long ideas down here on ETH as well. But yeah, I think ETH, this would be quite interesting, personally. There's some scenarios where Bitcoin does, I mean, if you look at Bitcoin dominance, this is a Bitcoin dominance range I've been talking about. This is the daily chart. You know, when we came to the highs, I said alts are likely to get stronger against Bitcoin. And as we come to the lows, and we've swing failure at these lows, which is also this 2018 low on dominance, Bitcoin's likely to get strong against alts again. And if we can hold this range, there's some scenarios where alts bleed a lot into Bitcoin. So wouldn't be surprised. Really, you could say that probabilistically, the most likely outcome is that alts bleed against Bitcoin generally, because we're bouncing off the lows of the dominance range. You can separate stop losses. Just go to, you're saying you spoke to Bybit support and they said you can't separate stop losses. You just go into settings and you set TP/stop loss on what's the setting called? I am so tired. On select positions. TP/stop loss on selected positions instead of entire position. And you'll notice that you can set separate stop losses. But, you know, this is a really, just on the low time frame, a really technical, this is technical price action. We have the swing failure, the back test, the rally. You know, we're putting a lot of pressure on this descending trend line. These are just scalp ideas. That's backwards. Yeah, maybe I will do a tutorial on the Bybit settings there, but there's really only one setting. So if you just put like $1 on a derivatives exchange, you'll see that you can open a position, put a stop loss, and then when you open a new position, you can just set a new stop loss. And it will you'll have 2 stop losses. And you can drag them around and move them separately. Starting to get some longs opening here, and there actually is, on a low time frame, some bearish absorption on this rally. That can be invalidated if we start taking the highs, but for now this is longs opening into this rally, some of the more aggressive longs we've seen yet, and they are being absorbed. But it's a low time frame absorption, but it's worth noting. When the setting is on your trading page, you're on your trading page where your chart is, where your entries are, you hit settings, and it's take profits / stop loss on select position. There's so many misunderstandings about things. So someone's saying separating stop losses does not separate your entries, so with high leverage it does not help. For one, your leverage shouldn't matter. Like your leverage should never be so high that that matters against your entire account. Like if you're using cross margin, you should never be within risk of liquidation. But I'll just explain this really quickly. It gives you your average entry. So let's just say I enter here. I've taken an initial position. That's my entry. And then I've taken profits in the middle of this channel. So I've closed half my position. Let's say I've made $500. Doesn't really matter. It's just an arbitrary number. So say I've closed half of my position. And now as price comes back down, if I re-enter here and add, it's going to say my average entry is now here. Okay? And price starts bouncing. I can have a separate stop loss. Say I want to put it here for this position and a stop loss for this position here. Those are 2 separate positions. It was saying that my entry was here, and now I entered again and it's saying my average entry is here. What happens if price comes down to this entry? Am I better off or worse off having taken profits and added? Well, I'm still better off, right? And even if price comes down through my average entry, my profits are offsetting this average entry. Actually, I have a better way to explain this. Tell me this. If you longed here and price went up and you closed your entire position here for $1,000 of profit, you closed everything, and then price came back down to here and you reopened your entire position and you put your stop loss at your original entry, is this any different? So you had one position size here, you closed the entire thing here, and you reopened the entire thing here, and now price starts going red P&L. Now you're down $300, you're down $600, and now you're down $700. Would you see this as any different than had you just left this position open? You had $1,000 of unrealized profit, you didn't close it, and price came all the way back down to entry, and this $1,000 of unrealized profit went to $700, $500, $300 unrealized, back down to zero. This scenario is actually better because you actually captured $300 of realized profit, and yes, the number on your screen is red, but you actually have made money, whereas here you've made nothing because you closed nothing, and all your unrealized profits went to zero. Whereas here you've captured $1,000 and then put $700 back at risk. And this is just an extreme example where, like, somebody, I've seen this a few times where people say, oh no, I just accidentally closed my entire position. Well, if I have a 1 Bitcoin position here, 1 BTC, and I've opened it here, and price goes straight up, and say I have 30% profit and I accidentally close the position, and I say, oh no, I wanted to keep that position. Why did I close it? That was an accident. Well, why not just reopen it? There's no difference. And your P&L might now go red when it goes down instead of your green P&L going lower. But because you've captured all the profits, your profits are just offsetting that risk. It's just a psychological thing now that you're seeing red instead of, you're seeing a red number get bigger instead of a green number get smaller, but there's actually no difference. And so that's what you need to think of compounding as. I know that's kind of complicated maybe, but if I have a 1 Bitcoin position here from here, and I have a 1 Bitcoin position still open here, and I close it and reopen it, there's no difference. I just still have a 1 Bitcoin position from here. Does that make sense? Hopefully. Yeah, I don't know if I explained that well, but people don't seem to understand this concept very well. There's no difference. If you have a 1 Bitcoin position, you have a 1 Bitcoin position. Whether you opened it here, close the entire thing here, and then reopen the entire thing here, there's no difference than having you just left it open. Now, if you have a 1 Bitcoin position from here, you close the entire thing here, and you reopen it here, that's always going to be better than had you just left it open and done nothing, right? Because now at least you've captured this profit, and half your profit's at risk now. But you know, psychologically, people think there's a difference between seeing their big green number go down, that's okay, and it's scarier to see the red number get bigger. But if the dollar amount's all the same, it doesn't matter. But I would just say, like, you really need to understand things like that if you're going to be trading. People are too caught up in the red versus green, and they're not thinking about the position size and the dollar amount. Someone's saying, can you pay for the membership with USDT? Yeah, there's an option for that on the website. Other people saying that was really helpful. That's good. I have made short videos in the members group explaining it, but I think I made it, like, sometimes people ask a question and I just make a video response and just post that in the chat because it's easier to explain it in a video. Maybe I'll make a more direct video on that concept, because people think it's worse if you have an entire position here and you're at resistance and you're getting reaction and you say, I'm just going to close the whole thing, or half of it, right? You take profits, and then price starts going down, they're happy, and you could just reopen that entire position back to normal size, and you're better off had you not done anything and price carries back up. Or if price goes down, at least you've captured half the profits. And whether you close the entire thing, half the thing, you can always just reopen your position. And as long as you're reopening it at the same price or near the same price, it's the same. And if you're reopening it, that closed position lower, that is always better. So if you've closed 50% here and you're reopening 50% here, even if you leave all your stop losses down here, you're still net positive. So that's why you should never be afraid to take profits, because anytime you're at resistance, you can add anywhere lower back to your original position, and you're better off having taken those profits. Let's say, for example, if I was long from here and I was going to say take profits here, well, I closed 50% of my position at whatever, 50% or 0.5% gain, just an example. If I close it, say when we swing failure these highs, I can add back anywhere here and it's better. Even if I closed 100% here and reopened here and left my stop loss the same, that's still better, right? Because these profits are offsetting your risk. Okay, so I do want to just read this because I want to make sure. Someone says the P&L stuff is clear and was clear earlier. Just the leverage thing was the obstacle because I wanted to leave it with 100x and use the capital to, let's say, scalp on ETH. Well, if you're scalping at 100x with your entire account balance, you're just going to lose money. Mathematically, it's impossible that you will consistently win. You might get a winner, but you will blow up your account with mathematical certainty. So I'm not really sure. I don't think people understand leverage. I would just say don't. If you have a single question about not just leverage, about trading, do not use leverage. Just to say, if you have a single question in your head that you have unanswered or you don't understand something, do not use leverage. You should be an absolute expert before you even consider using leverage, because you're likely using it improperly in a way that is mathematically guaranteed to zero out your account. Yeah, you leverage. Calvisi is saying, I think people need to use a position size calculator to find position size, and then leverage won't matter. And he's a member, and I always say leverage doesn't matter because leverage isn't a tool to trade more money than you have. Your position size should stay the same. It doesn't matter what your leverage is. You calculate your entry, your stop loss, and what your size can be relative to your account with a technical stop loss to maintain 1 to 2% risk. Someone's saying if you open higher, your liquidation price is higher though. So I'm going to say this right now. Your liquidation price should never even be something that you could think about, because it should be so far away that it's so far from your stop loss and your invalidation that it shouldn't matter. And if your liquidation price is something of concern that it could be hit in your trading setup, then you don't understand leverage and you shouldn't be using it. And I will note that if you're using isolated leverage, if you're letting your liquidation be your stop loss, then you're taking a 30% hit on your position because there's a massive penalty and fee that exchanges charge you for your liquidations. So you should never use a liquidation as a stop loss. I can just tell by a lot of the things that people are saying, and even things that people say on Twitter. Like, there's people that have a lot of you have zero understanding of proper risk management, position sizing, like even using liquidations as like any point of reference as an important thing to think about. You're using leverage incorrectly. That's not what it should be used for. And you should be, if you've ever even thought about your liquidation as a important part of your trading plan, then you shouldn't be using leverage. You shouldn't be trading actually, but and there's some, these are things you can just learn, and you will understand them if you take the time to learn them. But and the reason isn't because you have to become a better trader and then you can use 100% leverage with all of your account. Even the best trader in the world can't trade the way that the average newbie in crypto trading is trading. You could take the best trader to ever live, and with mathematical certainty, he will lose all of his money trading with the risk profile that the average trader is with trading with leverage. And that's just understanding the law of large numbers and probability theory, that over enough trades, even if you have an 85-90% win rate, and even if you're only trading with only quote unquote 25x leverage with your entire account and you have a 90% win rate, if you put on enough trades with mathematical certainty, you will zero out your account. If you have 20% risk or 25% risk in your positions, because how many trades do you have to lose in a row to zero out your account at that risk profile? Not very many. And if you put on 1,000 trades, which if you're a professional trader and you're trading full time, you will put on 1,000 trades. The probabilities of you putting on enough losers in a row over 1,000 trades to zero your account out is 100%. Maybe this will be interesting to some of you. If you have a 70% win rate, what do you think the odds of having 8 losing trades in a row is over the course of 1,000 trades? If it's just a random distribution of wins versus losses, you put on 1,000 trades and you have an 80% or 70% win rate, your odds of putting on 7 or 8 losers is 100%. There's 100% certainty that you will lose 8 trades in a row with a 70% win rate eventually. And it's the same thing of, just think of a coin flip. If you flip a coin, say with 50-50 odds, which most people don't trade at 70%, say you're trading at 50-50. Well, if you flip that coin enough times, if you flip it 1,000 times, the odds that it will land on heads 10 times in a row over the course of that 1,000 flips, you could call those 1,000 trades, is 100%. So if your risk management can't survive with losing 10 trades in a row, you have to understand that that's a mathematical certainty that you will lose 10 trades in a row. And so it's a ticking time bomb. Eventually you will zero out your account with 100% certainty, because your risk profile cannot sustain a 10 trade loss streak, which will happen. Even for me, that will happen. There will come a time when I have no longs to hedge my shorts, no shorts to hedge my longs. That would be kind of tough to do, but there will come a time where I'll just lose 10 trades in a row with mathematical certainty, and I know that. I don't know when it will be. It could be 2 years from now. It could be today. But I've also won 20 trades in a row. My win rate's higher than 50%. So there'll be times where I'll win 20 trades in a row, win 10 trades in a row, win 5, lose 2, lose 3, win 8. And there'll just be a random distribution of wins and losses. But if you're trading with risk management and your risk reward is it's basically a guarantee of printing money if you trade it mathematically soundly. And somebody who I would recommend listening to and reading his books is Mark Douglas. He is the master of thinking about this stuff in terms of probabilities. Getting a bounce off this level is quite nice. I do always find it interesting that, like let's just say the idea could be, I pointed out this swing failure idea, what that trade would look like, or even this this idea that I kind of struggle with this a little bit, where people can't take a position unless you took it, and that's sort of like, there's a lot of members in the group that they just trade. I mean, they might trade my ideas, but they just trade them. They don't ask. But new members always ask, did you take it? Did you take it? Did you take it? Well, I always say don't trade an idea you don't understand. And I try to give people the tools and ability to understand these things. That's why I go through things like this. And, whether or not I took a trade shouldn't determine whether or not you take a trade, if you understand the technical idea. And a lot of times I have ideas that I don't end up trading because I'm like, I don't really like the looks of this. And other people do, and the trades work. Yeah, Mark Douglas, somebody's asking. That is his name. Yeah, I mean, if I would be considering taking some profits if I was scalp long here. We have some horizontal resistance here, potential swing failure just locally. You know, if you did scalp this back test, this idea, lock in some profits, put your stop to entry and see what happens. There are worse things that someone could do. There are a decent amount of longs opening here, but there is some bearish absorption forming and developing. It's a low time frame though. Certainly could carry on much higher. I wouldn't short this personally, but if you were to short it, well, I could talk about these scalp setups. If you were to short it, the idea would just be to put your stop right above this high, because you're just scalping. So the same way you would trade a swing failure on a high time frame, you just trade this exactly the same on a 1 minute time frame. And so where you've taken the liquidity above this high, you've closed back below it, short with your stop above the high. And you have a very tight stop loss. I mean, scalping you typically do, but the technical setup here is very similar. It's the exact same thing as shorting this on the 1 hour chart. You take the liquidity above the high, you short, stop above here. Price action's fractal. It behaves very similarly on a 1 minute chart as it does on a high time frame chart. The only problem that people have with scalping, I think typically, is the frequency of having to execute. You know, fees can also be a bit of an issue. But like if you're having to execute multiple entries, take profits on a very low time frame, you're more likely to make a mistake. And then beyond that, people have a tendency of just not being able to take profits and trying to turn scalps into swing trades, where they aren't happy to scalp this as a 1% range, short, long, or this channel, short, long with 1% moves. And they're trying to turn everything into like a 20% move suddenly, even though they're scalping really low time frame ideas. Someone's asking me to zoom out and show the higher time frame parallel channel. Let me just get rid of all this stuff. But yeah, when it comes to scalping, I mean, that's sort of I think scalping is just something you have to be completely doing on your own. The moves are quick. The analysis is on a very low time frame. The windows are very small for entries and take profits, where you'd already be looking for a TP1 off an idea like that. For swings, you have a little bit more time typically. But this is the channel on a higher time frame. This didn't even actually pull. I think it got moved a little bit. It's essentially a perfect touch off the channel. And this is the way I like to draw channels. It's kind of proprietary in a sense, which is you use the trend angle of the highs and you anchor to the lows. And so before this price action even happens, you get the low of this channel idea. And that's typically not how people would draw a channel, but I find it very high alpha and very reliable. But I will say, especially if you're using, you want to try to get in and out. definitely out with limit orders, especially scalping low moves like this. Because with a market order, you're basically looking at 0.2% to total, like to enter and exit, 0.1% entry, 0.1% exit on most exchanges for market orders. So you need to exceed 0.2% profits to cover your stop losses. Or sorry, to cover your fees. But yeah, so this scalp, kind of like this, 1 minute time frame, still very technical. Swing failure, back test, you could long stop, take profits into this swing failure, you could short this swing failure. But this is just scalping. And one thing I'd say is these are the exact same ideas I use on high time frames. They're just applied to a 1 minute chart. Golden pocket retracement. Golden pocket retracement. Swing failure. It's all the same stuff. Descending channel. And so when people ask, would I scalp this? Would I scalp that? Well, the question is, would you scalp this 1 minute descending channel idea with a golden pocket retracement? Sure, you can scalp it. You might have to trade it something like this, stop above this high, and you're just scalping. But you have to know how to apply these ideas to your chart. And you would trade this till it breaks. You could trade this as a horizontal range. You could even start pulling volume profiles. You have a point of control here. A golden pocket right under it. It would be the exact golden pocket from this pivot low. But Brains is asking, seems like we're bouncing off the consolidation area from August 26th, which looks like a key area, but I want to wait for the golden pocket. Thoughts on the current bounce? Well, this is something I used to talk a lot more about, is when I'm near a level of interest, but, it's not like a major level like the 886, sometimes I will just look for scalp entries that I can turn into swings, because I can just break down levels. So I'm not really necessarily, I'm aware of the higher time frame ideas, but I'm coming down to a 1 minute chart. I'm looking for 1 minute time frame entries and invalidation, taking some profits, and leave half of it running. And then I've compounded my position using low time frame analysis and consolidation. If I was to redraw what I think is relevant here, it would look something like this. This is a range. We obviously made this low, broke it down, back tested as resistance perfectly. That's a support resistance flip. You have a middle of a range. There's confluence for this being a range. Perfect bounce here. This is the golden pocket of the range that we just rejected from, which is a local swing failure. This is the highs of the range. This might be somewhere where I would look to short, is a sweep of this high, stop above here. This would be somewhere where I'd look to long, is a sweep of this low. Or a major retracement after the highs. Ooh, there's nice confluence there actually. This would turn this into the golden pocket if we bounce. But anyways, so maybe we sweep this high, and maybe I'd look to long the golden pocket retracement with a stop under the low, especially with bullish absorption. You can just apply all of this, all these analytical techniques to the low time frame charts, and just look for scalps and try to just minimize your risk. Someone says I sound tired. I am tired actually. Maybe today wasn't the best day for a really long live stream session. But even if I wrap it up, I feel like I think this was really interesting. I feel like we got a lot of value, maybe, out of this. Got some good questions answered. But one thing I will say is, even if you're not trading it, doing this 1 minute time frame analysis can just give you a lot of exposure to price action. And when you're using the types of things that I use in trading, you can apply it and just kind of test it out and try it. You don't have to be trading it. And it's the same kind of things that are going to apply to high time frame charts. And so you can see, oh, are we bouncing from the middle of the range? Are we testing the golden pocket retracement? Just things like that, swing failure. And just see, are these ideas, how they work, how price interacts with them. It just gives you kind of some exposure to it. But yeah, and I'll say, like, I pointed out, this is a swing failure back test. This is a swing failure here. There's technical levels at play here. It's perfectly reasonable in a sense to try trading this if you're an experienced trader, but it's pretty much nothing should be traded if you're not an experienced trader. You should just focus on building that experience with paper trading or very low dollar amounts. Get that experience and then try trading these ideas. It also looks like there's a little ascending channel here on so that would have been added confluence to this short. It's a perfect touch too. So look how clean, oops, look how clean that is. You have the trend angle from the lows. That's could be pulled a little tighter. It right into the golden pocket, swing failure, ascending channel. Same way we had the descending channel. Just really clean. I am going to, I am hitting a wall, and I'm very tempted to shut it down, actually, and maybe just I'll give some updates and stuff, and maybe if something really interesting happens. But I've kind of beat a lot of the ideas I'm interested in, like a dead horse. There are interesting ideas here. I think scalping kind of makes sense, and then here at around, I mean, you'd expect 20K maybe to give out a little bit, 19,000 maybe into this old range point of control would be an interesting idea, especially if it came into like the daily open or something. Looking for strength there maybe make a lot of sense, and you might get away with adding to a long here on a scalp that you can turn some of it into a swing, but not as high probability here, I don't think. All right, guys, I'm going to wrap it up. I think I've actually done like almost 5 hours of live streaming since I woke up at like 5 in the morning to an alert. And I didn't go to sleep very early. So even if I don't fall asleep right away, I'm just kind of mentally tired. I appreciate everyone tuning in. Hopefully this was helpful and we answered some, or I answered some questions that clarified some things and maybe just spark some different ideas or ways of looking at the chart that you hadn't thought about before. And I'll talk to you guys later.